Hey guys, thank you for joining me in another video. Today I want to talk about how millennials are investing. As you know, my investment thesis is to save, invest, repeat, save, invest, repeat. It might sound boring, but it 100% works for me. Often I've said that we should try and keep things simple, and in order to do that, we should invest in broad index funds. We have no edge when it comes to stock picking. We're just normal mortals. We're not those traders, crazy traders sitting in the city that work over 24 hours a day, that might even work over 24 hours a day, staring at 3 or 4 screens at a time. We are not those people. We're normal people. We have to hedge our risks and we have to consider how to invest. So we have no edge when it comes to active funds either, and active funds don't tend to beat the market in the long run either. From my perspective, in the end, only 2 things really matter. It's the time that you're in the market and also executing your deals for as cheaply as possible. There's a really good book by Lars Crochet. It's called Investing Demystified. I'll try and put a link down there somewhere below. I have spoken about it on the channel previously. I'm pretty sure Lars would agree that he would fall into Generation X, and he has pretty much lived through the creation of the passive tracker fund. I'm a millennial, and as far as I'm concerned, I don't think millennials my age are as clued up as they need to be when it comes to investing. Having said that, and to my surprise, it's the Gen Zs and also the younger millennials that are actually all over this when it comes to it. The Sunday Times article last week showed that young millennials are actually investing in tracker funds and beating the stock picking professionals. What? About March 23rd to the end of May, approximately 40% of young people's allocations went into tracker funds, whereas over 65s only invested half of that. That's crazy. Such a big difference between the young and the old and the way that they're investing. But why? It's quite clear that new investors and the young investors out there, they're not impressed by these active managers. So data's shown that active managers, about 50%, fail to reach the benchmark of the index. So the odds picking the right one is also very high. Having lived through the financial crisis, young people are put off by the snazzy city life and the high fees that fund managers are charging. So they tend to go for investing through robo platforms and also online portfolio builders. It's smart. The technology is at their fingertips, so why not? One of the top 5 funds to invest in is the Vanguard Life Strategy Fund, which is a passive tracker fund. There are a few things to be aware of. Number 1, are you paying the fair fee for your tracker fund? Investing in via Vanguard directly will cost you something like 0.15%, or if you choose to invest through a platform like HL, Hargreaves Lansdown, they'll charge you a little bit more at 0.45%. So firstly, pick what you want to invest in, and secondly, pick the platform that's the cheapest. Remember that tracker funds track the market, so they go down as the market goes down and go up as the market goes up. Some active managers will say we can be proactive and take decisions that will reduce the stock exposure. That might be true to some extent, but let's look at the historical performance of that. If you're looking at the dot-com bubble and also the financial crisis that hit in 2008, there wasn't much of a difference between how the market performed and the selections that the active managers had made. They didn't actually perform better at all. The moral of the story is markets can switch quite quickly. So remember what your risk profile is and how much you want to be exposed before you pick exactly what you want to invest in. Remember, stay consistent and invest for the long run. You millennials out there, do you guys agree that we know what we're doing? I don't know. Let's discuss down there. Please don't forget to like, comment, subscribe. I want to hear all your thoughts, guys. Let's get a debate going. But until next time, cheers.